All right. I'm really looking forward to this chat, to be honest. As Bitcoin miners, what you guys do is you secure the most valuable engineered money, pristine form of collateral in the world. And that is kind of like our escape route right now.
Right.
Like, we have to print. There is no way that we don't end up printing. The math isn't there. If you don't print, then everything goes. And that goes against the mandate, right, of stability, employment. And the problem is that our zombie stock market is now turning and leaching into the economy. So we have a zombie stock market with a zombie economy. So you're going to need the big print. The government borrows this money. It prints the money, it borrows the money, and it spends it back into the economy. And if that were successfully working, then our debt to GDP would be getting healthier,
Right.
not worse. So we're taking these dollars, we're investing them into the economy. We're not getting back the dollar plus interest that we need to get back in order to become in a healthier position. So what do? We need to put Bitcoin on the balance sheet. We need to recognize Bitcoin is not a risk on tech stock. It is actually a pristine collateral. And just look no further than El Salvador. El Salvador has some of the best performing traditional bonds in the world. Why? Because they've added Bitcoin to their balance sheet. And that's what's making the banks increase their credit rating. So the United States of America needs to take the money it's borrowing and spend it better, spend it smarter. And you build wealth smarter with Bitcoin. So if we can put Bitcoin on the balance sheet, all of a sudden those dollars that we're putting into the economy that are not returning more than $1 are going to return more than $1 in Bitcoin. And now we can start to strengthen our financial position, which ultimately makes the dollar a little bit more stronger, right? It
Right.
gives it some more longevity so that we can really work our way out of the true problems, which are that we've become complacent and dependent upon printing instead of production. I think the biggest misunderstanding is that, again, it's just this risk on tech stock. You know, there's no difference when you're borrowing against Tesla shares versus Bitcoin. But obviously there is, because there's a strategic design behind Bitcoin, and miners know it better than anybody. And that design, it's rooted in proof of work, but it really comes to life through the halving and the difficulty adjustment. Because as you know, as the hash rate goes up and blocks are mined at a faster than 10-minute pace, every 2016 blocks, you're going to get the increase in the difficulty adjustment. Well, that's not, but that doesn't make us happy as miners, right? That's going to cut into our profits. But what it does is it pushes up the cost of production of Bitcoin. And when you look at price discovery processes, the cost of production is always the point of access for the value proposition. So if the cost of production goes above the perceived value proposition from the network itself, then price must come down because there'll be no demand. And when there's no demand, the price comes down until there is demand. So Bitcoin leverages the natural laws of economics and commodity cycles and price discovery to drive value into the network. So as we add hash rate into the network and we push up difficulty, we're actually driving value into Bitcoin itself. And then the marketplace is accepting that value. It's saying, you know what? A truth ledger in a world of lies is worth this price. The entire system is built on a foundation of proof of promise.
Right.
So literally the whole thing hinges on debt. We need to transition to an equity layer like gold, like silver,
Exactly.
like Bitcoin. So what we need to do over these coming years is continue to push hard on the political engine and the work that you guys are doing with Satoshi Action Fund to educate and to let these politicians who can make the decisions and legislate to come out and say, you know what? We need to integrate Bitcoin into our system. We need to recognize Bitcoin is not fighting the dollar. Bitcoin is not fighting these other things. It's actually the answer. It's the solution to the problem. It's not the problem itself. People really don't understand the difference between money and currency. These are two different tools. It's like the hammer and the nail. If you have the hammer without the nail, what can you build? So we can use these tools together. And then specifically, you know, what we do at People's Reserve is we find a way to empower ourselves to this reality, which is when you borrow inflating currency units that lose value over time, deflating engineered money that accrues value over time, you actually get what I call Bitcoin yield. So Bitcoin yield doesn't come from lending your Bitcoin to somebody else. It actually comes in the form of reduced burden of debt over time. And what is the problem that the United States of America faces today? The burden of debt. So we need a tool to help reduce the burden of debt so that we can figure out how to solve these problems in a sustainable way that's not printing. You understand what your cost of production is, and you're the only forced sellers. So people who just stack Bitcoin like us, we're not going to sell it. We know exactly what's going to happen. What's going to happen is what Larry said and what Larry wrote about. So we feel comfortable, but we don't have to pay costs. Miners have to pay costs. So what I would do is I would intrinsically understand what your cost of production is and make sure that when there is a premium to your cost, you are locking in a certain amount of profits. markets. I think for miners, the HODL strategy, unless you have access to US capital markets and can raise unlimited funding to elongate your operation, you should be locking in profits when you have a premium to your cost. And what that does is when we get that moment that Larry's talking about where price comes below cost and it's a huge buying opportunity, you're not sitting on a treasury that only has Bitcoin. You also have some cash, and that cash can be used to mine Bitcoin, right? Because if you're a Bitcoin miner, you don't just mine with your hash rate, you also should be mining with your treasury. So if you're properly managing your treasury and price goes below cost, you start buying. You are the buyer of last resort, just like the Fed is the lender of last resort. So take advantage of the data and analytics that you have access to understand where price is relative to cost to make the right decisions as we go through these speed bumps.